Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Well, the market is back up near its old highs that we saw in January. So now what? We thought we'd get an answer on the so now what part from our contributors, Editor-at-Large Steve Reitmeister, Research Director Shiraz Mian, and that popular market technician, Kevin Matris. A little background first, though, before we get into the so now what part of it. How did we get here? Because frankly, like February all of a sudden is almost a blur in my mind. It was in such a tight trading range.
Yeah, after hitting that high in mid-January, about 10.7 and change, the market took an ugly turn, even went underneath 10,000 for a brief period of time. People were starting to get a little bit scared, but the story is there really wasn't that much bad news. After it sounds like Greece was taken care of and the debt issues and the European Union was closing ranks on that, there wasn't enough bad news out there to create a reason to go lower. And then as economic reports came out and they were neutral to slightly positive, and then particularly last week where you had a full round of pretty good jobs reports out last week, it was kind of hard for the market to find a reason to go down, so that's a good reason to go up. And so we find ourselves pushing and only a stone's throw away from that previous high.
Yeah, absolutely. So Shiraz, against that background, having said all of that, where do you see the market going from here?
I think the sentiment now should be on the neutral to positive side. More of the headline grabbing concerns or fears appear to have been addressed. We seem to be on the broader economy front on a relatively more solid footing. The jobs number, as Steve alluded to, was good. Greece appears to be no longer such a big of an issue, and slowly and steadily as these reports coming along, that fear of double-dip recession appears to be receding and going in the background. Right. So on the whole, my feeling is that the market will be consolidating and have a relatively positive tone near term.
So more range boundness, if that's a word?
The overall tone for the entire year is range bound. I don't expect the market to break out clearly in one direction or the other, but this combination of fears and issues will keep it in a 5 to 10% range in my view. So when everything is said and done about 2010, I wouldn't be surprised if we haven't really moved a lot from where we stand now.
Kevin, what do you think on the technical side of the market?
I think there will be a breakout. You know, if you were to look at all of the major indexes, you can see the Dow, the S&P, the NASDAQ, the major market index, they have all finally gotten above their 50-day moving average. And if you look at the NASDAQ today, you finally got just above the highs that we had seen in January. The only disconcerting thing is that as we have broken through some of these technical barriers, there hasn't really been a lot of volume. I think the market is trying to get ready to be able to stage an impressive breakout. What I really think could happen, and what I would prefer to see happen, I would like to see the market, kind of pull back a little from here. If it pulls back, you would see it kind of cradle into the 10 and 20-day moving average, as well as bump back up against the 50. Once you can do that, I think you'll have a bigger base, and the bigger base you have, usually the more stable the breakout turns out to be. So I think you could still go sideways a little bit from here, but I think there's going to be a big breakout relatively soon.
All right, quickly, are you on the same page with these guys?
Well, they're both making similar points. Kevin's talking about very short-term positive, and yes, all the major indices have crossed the 50-day moving average, which gives them a little upside potential in here. But by the end of the year, I'm a little more in Shiraz's camp that a 5 to 10% increase of the overall indexes probably makes the most sense. But here again, that's an average year, and if you're selective and you're stock picking, you're in the right groups and you pick well, you can get outsized performance on top of that.
All right, so basically investment-wise, what are you looking at? What are you staying away from?
I think the industrials is still one of the better stories here, and as the sales are now coming back, they're getting nice margin expansions. I've recently picked up one Enersys, which is a symbol of ENS. It's the largest creator of industrial batteries. Not a sexy story, but this is a company that has consistently made money over the years. did very well during the recession to cut costs, and now is back on the growth path again. Another one that comes to mind that I think is a great value in a good industry is Seagate, which STX, over $3 in earnings predicted for this year, and yet the stock is trading right about 20, which is a ridiculous PE for a company that is just banging out numbers. So I think those are two good spaces, but in particular this year, with the market indices, not going up that much, I think value is certainly a big story here, and these are two stocks that fit the value mantra.
All right, I'm taking notes because I need the free advice.
Okay.
But Shiraz, what are you looking at? What are you staying away from quickly?
I see a positive correlation in some sectors that are exposed to and enjoy leverage to a recovering and growing economy. Like basic materials, a name to throw would be Olin Corp, ticker OLN. It's a commodity chemicals producer, about 2/3 of its cash flows. A little bit of a surprising diversification in its business mix is its gun business. It also owns the Winchester brand. Oh. So about 1/3 of the cash flow comes from there, and they have a very good juicy dividend. I'm looking for dividends. I'm looking for solid cash flows and balance sheet. I also like the commercial banks. A good name in that space that I like is New York Community Bank, ticker NYB. Again, solid balance sheet. They did not take TARP and pay out a good juicy about 5-6% dividend.
All right, Kevin, same question quickly.
All right, top 3 sectors based on the average Zacks rank. You have retail, autos, tires, and trucks, and conglomerates. If you were to look at a couple of picks from those sectors, in retail, you've got a company like Phillips Van Heusen. They sell clothes to men, women, and children. That's ticker symbol PVH. And then for autos, tires, and trucks, you've got a company like Johnson Controls. They are in a very unique position because they are an auto, tire, and trucks supplier, but they also have a battery business like Enersys, and they are in the building efficiency business. So I think this is a company that is perfectly positioned in 3 very important industries right now.
Okay, got it all. And I'll just take this advice and see you guys. Hope that the week ahead is a profitable one for you. That's the latest thinking from here with everyone here at the Round Table, Steve, Shiraz, and Kevin. I'm Terry Ruffalo.